Hey everybody, welcome to your crypto chart update for September 26, 2017. This is where we analyze the latest charts in the cryptocurrency space using solid technical analysis principles. I'm your host Tim, a retail investor and reporter. You can find my regular chart rundowns on tradingview.com or follow me on Twitter, both under the name BerlinTrader591. The goal of these videos is to analyze trends, go through some trade ideas, and help you broaden your understanding of technical analysis so we can all make better decisions and make some money. As always, leave a comment below this video, send me a question, or tell me the charts that you want me to analyze. I'm always open for your suggestions. Today's video is also brought to you by CryptoKing.org, which is a great source for the latest crypto news as well as these videos. Also, please support me by using the affiliate links below to join my recommended brokers and wallets, all of which I actually use, because a little cut comes my way. Alternatively, a tip in my Bitcoin tip jar, say that 3 times fast, would be very much appreciated. Remember guys, this analysis is for entertainment purposes only and does not endorse or advise any specific trade ideas, so please contact your registered financial advisor. Without any further ado, let's get into the charts. Let's start with Bitcoin. I haven't posted recently, but I haven't really seen anything crazy happen. We've seen some news come out that China was going to block the exchanges, but that hasn't really fully been implemented. We've seen some banks implementing blockchain technology. We've seen big whales come out from the old school market, Jamie Dimon and other bankers coming out and saying that it's a bubble and, there's no value in this and this can never amount to anything. Well, again, guys, I'm always a contrarian, and that usually means that those guys are getting in right now. They are playing it down, but you see what they say in a year or two when Bitcoin explodes. That's still my thesis. You need to have a thesis, either up or down or neutral. You have to have a thesis. My thesis is bullish, and that is based on, again, these factors that haven't really changed. Again, if we look at the 200-day moving average, that overall trend is up, no change. That's bullish. If we look at price is holding around that 4,000 level, in the box between 5,000 and 3,000. I pointed out that box before. This is the range I expect Bitcoin to stay in for the near future. Just like back in May, June, and July and August, we stayed in a range between 1,500 and 3,000. And it's amazing how these patterns resemble each other. We came up, hit highs, bounced around, dropped down, came back up. If we look at the pattern in this box, we have a very similar pattern developing, right? So we can expect probably something similar to happen again. So I'm not expecting any kind of breakout to happen just right now. And that goes along with the news. Maybe if we project this out to November, December, or the new year, maybe there's a development in the crypto space that really gets us out. What are you doing at the moment then? Well, you could be accumulating some more of your position. When the stock, I'm used to the stock world. When Bitcoin falls down to around 3,000 or 3,400, it could be getting in and adding to your position. Now, that's a little more aggressive, right? Because it could break this box and completely crash. That's always possible, so don't invest more than you can afford to lose. Rule number 1, only invest enough so you can sleep at night. If you can't sleep, you're overweight. So just keep accumulating little positions and build up a position, because when we get a breakout, you're going to be well positioned and you won't miss all of this move, right? If you wait for the breakout, then you'll miss a lot of the move. and everyone will, it will be obvious by that time. It's not going to be you're not going to be the first on the spaceship, you know, you're going to be waiting in line. But check out this trend, guys. This trend goes back years. This trend goes back years. And to break a trend like that takes a lot of power. Volume is increasing. That's another big sign that things are going higher, because volume has increased and the trend has gone up. So that means more and more people are buying. I don't see this trend slowing down. I think right now is as good a time as ever to start accumulating more of a position. If you're really short term, then let's drill down. Let's look at the 60-minute chart. So we look at the daily chart to get our overall trend, and we look at the 60-minute chart to see if there are any trades, maybe for a few hours or a few days. So that's what I want to look at today, is how do we go from the 1-hour chart to the 60-minute chart. Remember, on the daily chart, every candlestick, every green or red bar represents one day. But here on the 60-minute chart, every green or red bar represents 1 hour or 60 minutes. So those patterns on the 1-day chart, you know, those patterns where we see bullish momentum or bearish momentum or price falling or price rising, those patterns are the same on the 60-minute chart, right? They are reflected on a shorter time frame. They are fractal patterns. So that's the amazing thing about technical analysis. We can see those same patterns repeating on a smaller scale on the 60-minute chart. So here we see the dates going from the 6th of September all the way up to present day, 26th of September. So we're only looking at a couple weeks of time here, but in 60-minute increments. So if we check out what happened, we see that the trend was down. We had that big dip in the middle of September. And again, we had that huge volume surge. Price just shot straight up, right? It's really hard to get in on that. You're not really going to be able to catch those moves, right? You can keep buying as the price goes down, and eventually it will bounce back up. But that's really hard. You cannot time that. If anyone says they time a move, they're probably lying. But when we find patterns, we increase our probabilities and we give ourselves levels to trade off. So we saw a pattern like this one, which is called head and shoulders, which kind of looks funny right now. That looks like something else, but it's a head and shoulders pattern. What happens is we get a shoulder, then we get a head, and then we get another shoulder. So we have the left shoulder, the head, and the right shoulder. Very basic pattern that you've probably read about. And what you're supposed to do is get in when the price goes above that neckline. Now what happened here is the price didn't go up. No sirree Bob. The price moved sideways and eventually broke down again. But it's held a bit, and now we're back up against that neckline, that resistance level again. So right now there's kind of a struggle going on around this 4,000 level. Coincidence? I think not, right? 4,000, this is a big level. It's a crucial level on the daily chart, and it's also a crucial level on the 60-minute chart, right? We're trying to get above that. We came up, we couldn't. You know, we came up again, we couldn't. We came up again, we couldn't. Now we're up here again. Can we finally break through? Or will buyers give up and sellers will come in and the price will crash? Well, again, I think because we had this big pop back on the 15th, and because we do see price really trying to get up there, we just see it really wants to go above 4,000. And when it does go above 4,000, I guarantee we'll see prices rocket up. So if you anticipate a move above 4,000, now's a good time to add a little bit of your position, right? And then when it breaks 4,000, you can add a bit more. If you put in all your position right now, there's also the chance that price falls and you lose your entire investment. So you have to devise a strategy, right? Will you put in a third of your position before the break and then half of the position after the break, and then maybe another bit of the position when the break is confirmed? Well, that's something you have to decide. How aggressive are you? And if you're playing small, you could be more aggressive. But if you're making bigger trades, then maybe you want to be safer. Because in the end, it's going to work out the same. You can be more risky and trade small, or you can be less risky and trade bigger. But in the end, it's just about your risk tolerance, how much money you have, and what are your goals. Okay? That's why trading works, because everyone is trading differently. And that's never going to change until robots take over the world. So, let's check out Litecoin. We'll go to the daily chart first to check out our general trend, right? Litecoin had a huge run up from March to May. It's trended up in this ascending channel, just like a nice river, lazy river. And, right now we're seeing a little weakness. We're crashing below that lower channel trend line support. It's a trend line because it connects the prices. It's a support because price bounces off of that line. So it's a trend line support. We've now broken under that and we're pushing up against it. And that's not really the best sign, Technically, it should reverse and fall and crash down. But again, guys, I don't see bearish momentum. I see a bullish momentum. I see bullish trend through the 200-day moving average in blue. I mean, that is straight up. That's a bullish trend. I see buying volume that's building. I see price that exploded higher, and now people are taking profits. I just don't see that being a weakness, right? Maybe we develop some weakness, but weakness does not look like this. Weakness looks like this, right? Weakness looks like a dog that's about to fall off of a wall. I mean, it's like when you fall asleep and you roll out of your bed. Weakness doesn't usually look like an upside down V, because that makes no sense, right? Imagine if you're buying something and everyone's buying something, right? And then everyone stops buying. Well, now some people are like, sweet, I can buy it now, like a Christmas toy. Like everyone buys it, there's no more, right? So the price, the bottom falls out, but then they make some more and people keep buying it. Now, in a few months later, right, there is a rush to sell it on eBay. But that does not happen overnight, right? It takes a few pushes. So I think it's still safe to say that we're going to head up. Let's check out the 60-minute chart for our trade ideas, right? That's where we drill down. We go to the 1 day for the trend, and we go to the 60-minute for a trade idea. Okay, so here we are on that 60-minute. We see those trend lines that were on the daily chart, right? They're also on the 60-minute chart, which is very convenient here on TradingView. That's one thing I love about it. And we see that we're kind of in that trend line, but like I said, we're kind of below that trend line now, right? We're below that trend line support, and that's a negative sign. We want to see price get back in to that range. We want to see price break back in to that channel. Just like in Bitcoin, we want to see the price break above 4,000, right? So these two coins are kind of connected. Bitcoin needs to break 4,000, and it's right at that level. Litecoin needs to break back in the channel, and it's right at that level. So you see the coins are really connected in terms of where they are. They're not in the same place, but they have some similarities. So if we see Bitcoin breaking above 4,000, that's going to be a very good sign for Litecoin. But maybe Litecoin goes first. So maybe Litecoin breaks back into that channel above around 56, or let's say 60. Let's say Litecoin breaks into that channel. Well, that's a really good sign for Bitcoin, that Bitcoin is going to break 4,000. So you can use one coin to predict the move of another, and that's called intermarket analysis. So you see, guys, technical analysis is analyzing the price patterns and getting a range, finding out where support or resistance lie. Then we have multiple time frames, and that means we go to the 60-minute chart to get a more microscopic view of the price action to see if we can confirm our ideas. And then we have intermarket analysis or correlation. So we compare different coins, because if one coin is going up, then another coin might follow. And we can see that they have similar attributes. Litecoin and Bitcoin are both up against resistance. And we want to see some positive action there. We don't want to see one of those coins falling down hard. So a trade on Litecoin, I don't really see it above this resistance somewhere here, this trendline resistance, so above 60. I think we'll see a push to the top. But I don't really see that happening overnight. I think it's going to be a little more of a gradual process, some bouncing against the ceiling until finally we break the glass ceiling, do what Hillary couldn't, and we're just going to wait for that pattern. If you get in right here, guys, it's not a good place. You have space to the upside, but you know what? There's a lot of space to the downside too. It doesn't look like anything that I can predict, so it's just a shot in the dark on the 60-minute chart. Let's look at our old friend Monero. Monero, get your Monero rolling. I would like some rolls of Monero right now in my pocket. Yeah, Monero, following this stair-step pattern. So here we have a nice stair-step pattern. You see I've drawn some stairs, up the stairs, right? Like this. So when are we going to get the next step? Well, it's anybody's guess. From the looks of it in the past, it took us a few months here, a few months there, a few months there. It might take us a few months here to get the next step. But if you think the pattern's going to continue, then I think it's a pretty safe bet. You could buy a little bit of a position here. Again, a small position for a risky bet, and keep buying in, and just say that if the price drops below 60 here, then that could be your stop. That's when you would get out and call it quits. And why 60? Because it's about this, it's the former resistance of the former step. So we're somewhere actually around, maybe around, I might do something like 52 or something like there. So, if it gets down to there and keeps breaking, then maybe you might want to think about getting out. But to be honest, it doesn't look weak to me. Ethereum, our old magical friend Ethereum. Look at that volume. Wow, it's beautiful. Look at that. Whoosh. Just mountains of volume, like the Alps over here. Just a lot of beautiful volume. I did make a prediction on this, on Ethereum, that I will show you in a second. I'll hide those drawings right now. Again, we see that price stuck between a support level here at 150. Price bounced there in May. The price bounced there in July. Will it bounce again at some point soon? I don't know. Or will it crash up against the ceiling, the resistance right here at 390, 400, the resistance? We bounced against it a couple times. Will we break out of the resistance? Well, I gotta tell you guys, I am really liking this chart. I feel like Ethereum is gonna be a big trade at some point soon. If I was to point out one trade of the coin so far, it would be Ethereum. Bitcoin's kind of meandering. Litecoin is a little weak under that channel. Monero looks nice, looks interesting. It is developing a stair-step pattern, but Ethereum a little closer to putting in an interesting pattern. We really see this ascending triangle pattern, which means that the resistance at the top is flat, but the price at the bottom is actually making higher lows, and that is a sign of decreasing selling pressure and increasing buying power. Buyers are coming in earlier to pick up some Ethereum. And you know what I really love? I love this 200-day kind of coming up closer to the price. That is usually a really powerful motivator, a powerful boost to the energy of price. Price bounces up against that 200-day, and that builds a lot of interest. A lot of people take that as a signal to buy. And again, if we get some action up here below that resistance level at 400, that would be really healthy. And look at all this volume. It's all green. guys. The red volume is small, the green volume is big. It's an old thing, old school analysis tool that doesn't really work on stocks anymore because of high frequency trading and all the tricks going on there. But in cryptocurrencies, we can really depend on those behaviors a bit more. So I'm really liking Ethereum, guys, for a trade. Let's drill down into the 60-minute chart and let's put down those drawings that I had before. What did I put? Oh yeah, there's nice head and shoulders on Ethereum. I posted this on tradingview.com. Again, you can find all my trades there, all my chart analysis. I release them when I see something interesting, and you can also get to my Telegram trade alert list from TradingView. And I made this head and shoulders, which is still in play. If we can just hold this 285 level and break out to the upside, I think that would be a really good sign. I think if we do that, right, if we break out above 300, as I wrote here, I think we're on our way back up to 350 or possibly 400, maybe a little while longer, but definitely 320, and then maybe around 340, 350. So remember, guys, set your stops hard. So if we break above 300, set your stop here. And if we get to 320, raise your stop to 310. And if we get to 350, raise your stop to 320, for example. And you have to make up a rule for yourself. Just always follow your rules, right? If your stop is 5% or 10%, or with cryptos, it could be 30%, then keep to your stops, right? Just get out and find a new trade. Okay, let's check out PivX. I keep pushing PivX. Let me see, where's my PivX here? PivX dollar, where is it? Let me find it. There we go. So PivX is around $3. Not really where I want to see it, to be honest. I thought it was going to break out, but if we look at the daily chart, my theory is still in play. Nothing's really changed. We have a very strong upward channel above a 200-day moving average that, like Ethereum, is kind of coming up to connect with that price. Again, I think that's a really strong sign. If we get priced and the 200-day coming together, we often see a bounce off of that level, and that could be the catalyst to accelerate PivX or Ethereum above, out of their channels. And that could coincide with some news, right? Ethereum has a split, fork coming up, and there's a lot of things happening, and technicals are supporting that fundamental analysis, and fundamental analysis is also supporting the technical analysis, and that's a really good synergy. When those two things come together, we can see some big moves. Let's check out Ripple coin. Yeah, okay, actually Ripple looks really good too. I haven't checked out that chart in a while. So yeah, Ripple's usually just like mucking around, looking really messy, but we have a nice breakout here of this triangle. Here's this triangle that formed, this pennant pattern, right? We saw a big run up, we saw some consolidation, and this is a great example, guys, of what could happen with PivX or Ethereum. That 200-day moving average curling up nicely under the price, right? Added to that, so that's the trend, right? The 200-day is moving up, and it's touching that price. It's rolling up that price. It's supporting that price. We saw a breakout of that consolidation right here. And you look at that. Nice, beautiful breakout with nice, beautiful green volume. Love when that happens. But since then, we haven't gone anywhere. We've just kind of consolidated again. But it's healthy consolidation because it's above that old trend line resistance, right? Here it was resistance, and now it's support. Now that's a really great sign. This former resistance has become support with a capital S. Added to the fact that the trend line is coming up to that price, I think Ripple is actually in a great position right now for a trade. I would put this trade on, and I might actually do it. We have this support level here at around 16, 15, 16. I think that could be your stop. We have to find our entry, so I'm going to drill down into the 60-minute chart to make a trade. Now this is how I do it, guys. So I say, hey, that overall chart, that overall trend on the daily chart looks really interesting. So I drill down and check out the 60-minute chart. Now look at that. A few days ago, it bounced down to that trend line, which we see here as well. That's that trend line we saw on the daily chart, and it bounced right off of it. Isn't that beautiful? Perfect bounce. I didn't do that. The trend line was there, and we see a perfect bounce off of there. That's a really good sign. That means people are paying attention. And right now, we see this former resistance area here. It's making this resistance area around 19. Let's call it 19. And we're bumping up against that right now. We're bumping against that right now. It's kind of just a bottoming pattern, right? We see price going down and kind of forming, a messy head and shoulders, but all that really is a bottoming pattern. We can say that we're making a low here, a higher low here, a higher low here. We're making higher lows, but we're not making higher highs, right? We have a resistance level, right? Keeping us down. What we want to see is a breakout of this resistance level to the upside, right? So I think that's a great possible trade right now if we are above 19 on Ripple. If we can hold above 19 on a 60-minute candle, right? So when we see a candle finish after an hour and it's above 19 in a healthy way, that could be that's a buy sign. If you want to be more conservative, you could wait till a second candle closes above 19. So 2 green candles that would confirm a breakout, and then you could add to your position. Again, you want to make your stop nice and tight. So starting out, so around 19, you could have your stop. And if the price falls below, you can get out with a small loss. But I think if we're above 19 or 20, really with some confirmation of green candles, we could definitely see, let's say around 21 or 22. Now that's just eyeballing it, right? I'm just eyeballing it. I always take profits when I can, but we could make a more official kind of target. And I'm going to go from the high of that little pattern to the low of that, let's say, head of the head and shoulders. So 161.8 would be around 21. So basically what I said, right? Just from experience, you can see that that 21 level is the 161.8 Fibonacci retracement. That's how I make my targets, and they just seem to work out. And look at that. We have this beautiful level where we had a lot of support and resistance, right? So a lot of congestion in that area, a lot of traffic from before. And when we get to that area again, we'll see some more traffic. We'll see some more congestion. So when we reach that level, we want to take our profits, because there's no point in risking a pullback when we've made money and losing it. And there's no point in sitting around going sideways in a lot of traffic, right? Get out before the traffic. But that's a great example how we start on that one day and we recognize a trend based on the daily momentum, the daily price action, and then we drill down deeper into the 60-minute to identify our trade entry. And of course, you can apply that even further. You could go down into the 15-minute chart and play around a little more, right? You could say, oh, right, so once it gets above this little head and shoulders, we saw a smaller head and shoulders. When it gets above that, I'm going to get in. And you would have made, already would have made like 10%. So The only problem with that, guys, when you drill down, if you look at that volume, it's pretty pathetic. I mean, this is Poloniex, so this is Ripple on Poloniex. I mean, there's no trades in some of these hours, a whole hour, and no one trades the coin. I mean, that's ridiculous, right? A whole hour and you get like 10 trades. You can see the price action here in the price bar. There is no price bar, right? That's why we have all these skips, because there's no trades in these times. That's really bad for liquidity. I mean, that means you're going to get really bad prices if you're trading small. If you're trading for a 10th or a 100th of a point, I mean, you're not going to get good prices because you're going to get ripped off because there's no one to buy or sell. There's no competition. So we need to go to those bigger time frames like the daily chart if we want to get better prices. Okay, so that's another factor, of course, is liquidity. Make sure that the coin has trades. Make sure that people are trading it. Volume is important. Yes, that's my... Oh, let me look at one more. Dash. See how Dash is doing? Looks really like Bitcoin, right? Similar to Bitcoin. In that range, in that box, right? Looks a little healthier. It's higher in the... Right? Bitcoin's kind of stuck halfway in the box, where Dash is in the upper half of the box, right? Upper half of the box is healthier than the lower half of the box. Really. So things look good, and I'm excited. Some things are definitely developing. Monero, Ethereum, and Ripple right now looks pretty good for a trade as we lined it up. Keep an eye on my blog, guys. It's good to be back. You know, if I miss a few days, I apologize. I am very busy. And if the more you guys donate, the more I can post, because then I have some more time. So much appreciated. Always love doing this. See you next time. Peace.